Singapore's exports just saw the sharpest jump in more than 2 decades. The biggest driver? Electronics. That's right. And it is fueled by the global AI boom. So if Singapore is part of this supply chain, is this where investors should be putting their money? Welcome back to the Money Talks podcast. I'm Andrea Heng. Today, we're going to take a look at how the AI boom is boosting Singapore's electronics exports and, more importantly, whether this is an investment opportunity for investors worth watching. Joining me is Ven Sreenivasan, a former editor and journalist who has covered markets and business for more than 30 years. So the right man is in the hot seat today. Welcome to the podcast, Ven.
Thank you, Andrea. Glad to be here.
I'm very excited to get into this conversation with you because Singapore's non-oil domestic exports saw sharp growth in May, with analysts linking the surge to the global AI build-out. And this has been the rationale and the picture for quite a number of quarters already, which is when the Nodex gets released, right? So what exactly is Singapore supplying to the AI boom?
Supplying is the right word, okay? The global AI boom is not just about chip makers. Singapore is structurally positioned as an AI infrastructure and enabling hub rather than pure AI model,
Right.
Or chip design center.
Okay.
We are not that, but we are supporting the tech build-up, okay?
Mm-hmm.
We supply three critical layers to the global AI build-up. First, we provide advanced manufacturing capacity in semiconductors, precision engineering, high-value electronics that feed directly into the GPU memory equipment supply chain. Okay. Secondly, it offers a world-class data center power connectivity infrastructure. We do that, right? Underpinned by political stability, okay, that's Singapore, strong rule of law, dense network of cloud and telco players. Okay. Third, we have banks and engineering houses, integrators that act as sophisticated adopters. So Singapore is a supporter here, and we are benefiting as we are within that flywheel of AI tech build-up, global build-up.
Is there, a question of risk when you are so involved and such an integral part of that flywheel, like you said, right? Because all it takes is for something to go wrong in AI, people stop believing in it, stocks plummet. What happens to Singapore's position then?
So Singapore companies are more of leverage, pick and shovel players.
Okay.
We are a bet on the global AI capex cycle. So our risk is at the second level. Whatever happens at the global level at the AI build-up, if there is a sudden shift in the circumstances, or rather the appetite for particular technology, if we don't follow that as suppliers, that's where the risk is. So while we are plugged in to your winners, you're okay. If you are plugged in to players who are on the way down, you are going to be on a losing wicket. So that's where the risk is.
Okay.
For right now, I mean, most of our players are benefiting because we are supplying the big guys out there in the West and in wherever else, whether in China, the West, in Japan, and Korea. We are the main suppliers. We are okay. The risk is all right, manageable.
So that's the thing. When we rewind back to the good old days, right, when Singapore started as a historical manufacturing hub, I mean, we obviously couldn't have had AI in our minds. So how has that sort of positioned us strongly as, part of the tech scene in general, from where it was before in the 70s and 80s to where we are now talking about AI?
Okay, so what you're referring to is the early days of Seagates and disk making and that kind of thing. We went through a period where there was high growth in the 70s and 80s in that industry, right? The early tech industries, like when computers were coming out, PCs were coming out, we were providing a lot of components to the industry. The thing about Our economic planning model is we always look 10 years, 20 years, 30 years ahead. What is the next big thing? And our industrial policy, our national budgeting, the way we allocate land and resources is all geared towards what is coming up the road, 10 years down the road, 20 years down the road. We don't look at what is now. So we sort of knew what was happening, what was going to happen. We saw what is happening in the US, what is happening in Silicon Valley, and we prepared ourselves. Okay, so today we have the microns and all based here. I mean, and we are pretty much well positioned to ride this wave.
Okay, so for those who are seeing this rise in exports, what type of Singapore-listed companies could have exposure to the wave that we're talking about now, the AI wave?
I would divide the companies that would be beneficiaries in 5 clusters.
Okay.
First, I would start with the REITs or data center type players.
Okay.
These are the data center landlords. The second is the chip-related and precision engineering manufacturers.
Okay.
All right. Then there is the telco infrastructure and power players in Singapore. Who are these? Singtel, the biggest. Okay, telco plus DC, cloud infrastructure footprint, big player. Then there is Keppel Limited. Okay, this is a very restructured company now. Used to be a conglomerate. Now it's an asset-light infrastructure, asset management player. Okay, with a focus on DCs, sustainable urban solutions, and digital infrastructure and stuff like that. Third player in this third cluster is Sembcorp Industries. It's investing very heavily in renewables. Okay, increasingly supplying DCs, data centers, and using AI for grid energy optimization. Fourth one is the engineering and system integrators. The biggest in this area is ST Engineering. AI is embedded in their aerospace, their MRO, their defense system, smart cities, and they have cybersecurity capabilities which are very essential for the AI space. So demand for their services is always there. Finally, though indirectly, but big players are our banks.
The fifth cluster.
DBS Holdings, OCBC, UOB. Okay, heavy use of AI in risk, fraud, customer analytics, ops. They deploy AI in credit scoring, competitive compliance, personalized product recommendations to improve operational efficiency. They are big users. They also finance the industry. They finance the AI. So, I mean, these are the 5 clusters. Then you have smaller players like Serial Systems who are basically into the distribution of chips and all that.
Got it.
So the thing is this, we have quite a number of players. We may not be AI, the frontline AI guys, but we are very critical in this whole game. Okay, and we provide very essential services. We have very good capabilities in this field.
It's essentially like what you said. We are the critical support system for the AI boom, right? Now, of these 5 clusters, are we to treat them equally in terms of, their exposure, how beneficial they are to the ecosystem? Or are there sectors from this cluster? Is there one cluster that's more will have better margins perhaps, or more resilient demand?
Tough question. It's very hard to say, right? They all, it's like they all come in to this game from a different angle.
Correct.
The chip guys obviously will be most directly impacted, or most direct beneficiaries, or will incur the most direct hits if something happens. All right. The least impacted would probably be the financial players, the banks and all, because they are diversified in who they serve.
Correct. It's not their only play, right?
Yes. Then in between are all the CSEs of the world and, the data center builders, the REITs guys and all that. So it's a range. One cannot say all of them will be hit equally. But some will have a more delayed impact.
Okay.
Some will have a more immediate benefit. Some will benefit further down the road. So it depends where you are on the stream.
So, is buying into a Singapore listed semiconductor or electronics related company potentially a more stable way then to ride the AI theme rather than buying into the US tech giants? Or are they seen more as, I can't afford the US companies. I'll buy something that's affordable, within reach, domiciled in Singapore, and that's the appeal to me as an investor.
Okay, I mean, if you want more direct exposure, you'd go to Wall Street. You'd
Sure.
buy the big guys, the Magnificent Seven and a whole bunch of others who are in the game. Okay, the Intels and whoever. Buying Singapore listed semiconductor electronic related names is more of a leverage picks and shovels bet,
Okay.
On the global AI apex cycle.
Okay. So when you say picks and shovels, what does that actually mean?
That means you're going more downstream.
Right.
Okay, to the guys who actually support the industry.
Okay.
The top guys will be the big beneficiaries. I mean, you hear Wall Street, or this stock went up 5% yesterday, went down 5% the day before. Singapore, there's no 5%, you'll panic if anything goes 5%. Ours is a small 1% move,
And that's enough.
In a way, you're more protected, you're more insulated
Okay.
from the massive swings you see up there.
Got it.
So I would say that you need to basically look at where the money flows are, what the orders are like, things like that. Everybody can claim, oh, I'm part of the AI, or I'm this, I'm that.
Yeah.
But you should treat all AI exposure as like any other thematic pitch. Start from the cash flows, who are the customers. Don't just look at the headline. I mean, anybody investing in companies or stocks, you need to look at the hard evidence of where their money is coming from, who are their customers, how much orders are they picking up, how strong are they, what's their competition, how well are they positioned in the market. These are issues that are important, and that's what the analysts do. They study these. So I mean, anybody looking at investing in these Singapore companies should do some reading up, should do some homework.
Yeah, I think so too, and I think it's also good to compare the various names that we have in the bucket, right?
Yeah.
Thinking about one company versus the other, I think it tracks these data points track growth essentially, and the potential to grow, right?
Yes.
So, remember earlier I asked you, how these Singapore companies supplying and supporting the AI super chain, so to speak, they do carry a risk. And that is, if something goes wrong in the AI scene, the literal boom goes bust. Some of these companies are going to get hit, right? So what could that global event be? What do you foresee as something that could potentially derail this AI story? An example I'm thinking of is a pullback in hyperscaler spending. We saw that briefly during the energy crisis when the US and Iran had their conflict, and it's still going on. We're still seeing the ramifications of that, right? US-China trade tensions, if those increase, that could also be a scenario that could lead to a pullback. But I guess the question is, are these pullbacks enough or going to be big enough to withdraw attention from the AI boom?
You see, throughout human history, we have gone through revolution. The last revolution was the Industrial Revolution. That was about 150, 200 years ago. Okay, when we moved from being an agrarian society to a manufacturing society. We have grown over 100 years. We are now in a new revolution. It's the tech revolution. I mean, I would be pretentious to say where this is headed, but it is going to change our lives, from medicines to lifestyles to transportation to entertainment. And I don't seriously think we are going to see a major bust up. We are going to see bust ups of particular companies or particular areas where there's overspending and they can't get the act together, or the customers are not there, or they are driven off the road, or in some there'll be a lot of consolidation as well.
Yeah.
Some companies will consolidate with other, buy up with others. But I think this capex, this tech build up, is something that has a long tail.
Okay.
And it is going to carry on through at least my life and yours as well.
Yeah.
So I think for Singapore companies, these companies that I mentioned, the 5 clusters, right? Whether REITs or chips or property guys or the whatever, cybersecurity. If you are in the game and you keep yourself updated with the developments as the cycle continues, but morphs into this and that. If you are relevant, you are able to support the big guys out there, you'll be fine.
Okay.
So pick companies that are constantly innovating, constantly improving, constantly in the game, constantly looking ahead.
Yeah.
They'll be okay.
Okay.
If you're just going to be sitting there and saying, "Oh, I'm exporting so much for this guy, I'll just keep doing the same old stuff and exporting," you may be in trouble if your end customer suddenly changes or something changes out there.
Yeah.
So I think this is a long game. And I don't think we are going to see a major bust up as a whole sector or industry bust up. There'll be minor bust ups of minor players.
Would you consider the .com bust a major one or a minor one, considering where we are, where we've come in the tech
.com
revolution?
bust was hyped up. It was all
Really?
hype. It was hyped. There was nothing big happening. Everybody talking about it like there's something big happening. But this is something real. Actual money, actual products, actual change in lifestyle, actual change in outcomes.
Right.
Okay.
So they're tangible.
It's very different. It's tangible. That's the right word. Compared to the .com bust, that one was all hyped up to be something it wasn't.
Right.
And when it didn't happen, it just went poof.
Yeah.
That kind of thing.
Okay.
But this one is real.
So then, as a parting shot, right, for the retail investor who is excited by Singapore's AI-linked export boom, what is a sensible way to think about this opportunity to ride the AI wave without over-concentrating portfolios or blindly chasing hype? Because we know there are investors, retail investors especially, who think about it from this angle. Oh, I'm buying into this company because this is what everyone else is doing. So how do we not over-concentrate ourselves into one play in the AI boom?
Okay, I mean, I'll tell you something that everybody will tell you. I mean, diversify your portfolio. Right?
Yeah.
And then follow the money. Okay, look for specific numbers tied to AI. Okay, such as quantifiable revenue from AI, data center customers, stated cost savings from AI deployment, or disclosed percentage of book order linked to AI segment. Follow the money.
Okay.
Second, examine who they actually serve, who are the customers and how. Okay, for infrastructure and hardware names, you want a clear exposure to the data center operators, the hyperscalers, the chip makers, AI-heavy enterprises and all that. So you need to know who are these guys. Don't just say, I got these customers. Who are the customers?
Yeah.
What are they doing?
Okay.
Third, inspect the profit and loss statement balance sheet for real effects over time. Okay? Authentic AI deployment tends to follow a sequence. Initial investment in people and systems, followed by gradual improvements in operating margin. Okay? Cost to income ratios. Okay? And then revenue per employee. All of this should tilt in your favor, in your balance. Finally, focus on narrative discipline and governance. Compare what is said in the press releases, okay, and presentation with audited annual reports and what the numbers tell you. So basically, do some homework.
Yeah.
Okay, don't just listen to the guy in the coffee shop giving you some advice or your friend advising you over a glass of beer.
Yeah.
Do your
Especially when
homework.
there's a glass of beer involved.
Especially a multiple glass of beer.
Yes, exactly.
So that's important.
Yeah, I think that's important advice to end our conversation on. Thank you so much, Ven, for sharing your thoughts with us today.
Thank you for having me.
And thank you to our Money Talks community, as always, for tuning in. Remember, when it comes to your money, it's always good to get professional advice. Now it's time for me to ask you a question. When it comes to the AI boom, are you going to invest, or would you rather invest in a big name tech company in the US, for example, or a quieter pick and shovel company like Ven described that's playing an equally important role in supplying to the whole AI ecosystem? Let us know in the comments from wherever you are listening to us from. You can also email us, by the way, cnapodcasts@mediacorp.com.sg. So we actually did get a comment on a previous episode where I talked with Chua Yi-wen from DBS about whether or not you should consider selling your special discounted shares from Singtel if you own them. Now, this person asked, if I hold on to the shares, what will happen when I pass away? Will the shares be auto-transferred to the person I've nominated with CPF? So that's a very good question. I went back to Yi-wen and this is what she had to say. So basically, before the 21st of November, if you have made a valid CPF nomination, yes, that money, your Singtel special discounted shares, will go to your CPF nominee, and that person can then either choose to sell them or transfer them to their own CDP account. Now, without a CPF nomination, they become part of your estate. After the 21st of November, those shares will sit in your CDP account and be treated like any other of your assets. They won't automatically go to your CPF nominee. So at the end of the day, having a clear will really help in making the transfer much smoother for your loved ones. Now again, if you have any questions or comments for me or any of the guests on Money Talks, you can always email us at cnapodcasts@mediacorp.com.sg. This is the Money Talks podcast. I'm Andrea Heng signing off.